January 4th, and it was a turnaround Tuesday. Sharp gains of over 30 cents in the soybean market, almost 20 cents in corn, which drug the wheat market higher for double-digit gains. What was the mix? Well, the rains last week that did occurred in areas that are already beyond the reproductive stage, those that made it into Parana and down into Mato Grosso do Sul. They determined that that is not helping much. They're already waiting for harvest to get underway in some of these areas, so much for the rain. And what we do know is forecasts turning again warmer and drier. So let's take a look at some of these weather forecasts, and let's get to the charts. This is the GFS 10-day almost to mid-January, January 14th. And let me just draw the line. There she is. All of Argentina remaining bone dry into next month, into this middle of this month, and the temperatures 90s, near 102 in some areas. We are catching a little rain in Rio Grande do Sul. Otherwise, some rains also try to materialize in areas where the crop is considered almost done north of this line. They're trying to harvest beans up in here. Remember, in South America, you harvest from the north to the south. And what's happening is these guys want to get harvesting. 2 dams broke up in this area. Harvest wants to get underway all through this area. This is the bottom side of Mato Grosso do Sul, right down in here, and that's where they would like to get started here soon as well. Parana caught some rains, and now they're catching rains, and guess what? It's harvest time, and they're already writing crop down. So this, along with the temperatures for Argentina staying elevated into the 19th of January on this model. Again, 100-degree temperatures, very likely on this color scale for areas into Argentina. Only Buenos Aires looks to maintain normal temperatures. And of course, wonderful, 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 as Lawrence Welk would say, dryness maintained in the winter wheat areas. Nobody cares because, hey, it can start raining in February or something. As long as the dormancy breaks and it rains, everybody's happy, except for the areas that have the blown out wheat up in here. But nonetheless, you could probably take 500,000 acres off of our total production capabilities out of the winter wheat country. But still, this is a story for another day. And this is through Friday, January 14th. No rain throughout the Midwest. Okay, beans. Here we go. We are, since the November 8th low, we had our wave 1 up, our ABC wave down into our wave 2, and now we're doing a 5-wave advance, wave 3. Let's break it down even tighter. This is the low on November 30th when we were saying that was the bottom of wave 2. We did a wave 1, we did a wave 2. Our minor 3 of 3 was 1384.5. Broken a 4th wave, ended up being 25% retracement of this move to here. And then, of course, we subsequently turned higher. Our 2-hour moving average, even through the hard action we got into yesterday, held. And we're still moving higher. Today's close above a previous high is encouraging. Measurements suggest we're going anywhere to 1417 to 1435. That's why I have the arrow up here near 1430. This leg should carry us up into here, would be the anticipation. On the daily continuation chart, we are in wave 3. Like I said, we're in 5 of 3. Then you get a 4th wave correction. Who knows where that wants to go to? We'll throw you some guesses once we do find our 3rd wave top. If it's in this range, chances are it's a 25% correction of some kind into the old resistance of the 1369 areas where we'll probably find some buying. And then we get a 5th wave. And that's a 5th wave of 5. But that 5 is not to scale. In theory, we are in a 1, 2, 3, 4, 5 waves up, then you get an ABC, then we do another series of rallying, and that gets us up to 5th wave, which in theory should take out last year's highs. But 5th waves are not absolute, but we wouldn't mind seeing beans on somebody else's troubles out of our country get us up to maybe $16. But for now, we think the prospects of 3 into that 1417 to 1430 area is very real. We get our 4th wave and then another shot somewhere near $15 for the final 5th wave of 5 waves up. Something around 1470 to 15, and then we get another larger break. So we're just walking this dance, 2 steps forward, 1 step back. Corn had to break hard to go all the way back on Monday to the trend line support. Of course, caught our spec stop. The bounce was just off of the 50-day moving average didn't quite get there. That was 82. And now we are into another wave higher of wave 3. Same thing here. We should get to about 1635 now, 1640 on this press. Then the next setback could probably back to that $6, $5.98 range. And then we move on up to about the $6.50 area to 660, which we think is our third wave target in 5 waves up. Daily continuation chart, you can see how even the trend line was the target of Monday's low. As you zoom out, easily 650 recovery. Even if you're a bear, you've got A, B, you got a 1, 2, 3, 4, 5 waves down. And you can say, oh, it's a bear market. Yeah, but we can get A, B, C back up to 690, potentially into spring, and especially if the crop continues to go haywire for the second corn crop out of Brazil. Now, Kansas City wheat needs to be up tomorrow. It got lifted late in the day by the corn market. It needs to be back above the purple line. Our 6-day cycle maybe hit a day early. The Chicago wheat held on the close today, got back above the 100-day moving average. Again here too. Any movement below 750 now would be bearish and implies this is an A, B with a C depth still in play. I'm trying to figure out how they're going to pull this stunt off, but that's what technically it implies. We could see the wheat down to 720. Again, how? I don't know, especially with the corn market pushing against wheat values moving higher. So we'll see. It needs to hold this value through the week and start taking out some previous day highs. I can't project that this is a low unless we're closing back above 792. That's what it's going to take to know that we're actually in our next wave higher. Minneapolis wheat breaking down, barely closed higher in the session. Major support 945, 950 on this setback. April live cattle, we just wanted to note, we've been warning about getting these cattle hedged up, especially after the first year. They have a tendency of declining. Boy, they wasted no time. Yesterday, closed lower and fell out of bed today. Major support comes in, 140 to 141. Okay, they could bounce off of that. But if we close under 140 to 141, then that is a top. That we'll see. Otherwise, trending support still is in play. You can see it. It's in play. I can't draw a straight line to save my life here, it seems like. But anyway, 140, 141. Got to hold this, or otherwise April live cattle have topped. If they can hold this, then we'll start another push higher. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.